on and Bitcoin in general. I put an article out recently. You can check it out at the blog there. Put the link in there. 4 signals risk on and off the market right now. Going through the Nasdaq and a couple of things to take a look at the market outside of AI. So you can check that out today, though. I just want to dive right into the Qs and Bitcoin and why. I get a little bit more into why I maintain a stance of caution and prudence here. So here's the Qs. This is a daily on TradingView. I've got the money flow on the bottom, obviously price and volume up here. I mean, if you look, call me crazy here, but, is this another lower low? We've got a high set here, another lower low, or a lower high, a lower high, and then we ran into some trouble. Now, this is all still technically another lower high from the most recent all-time high for the Q. So we saw a lot of distribution in here. Money flow turned red on the daily. And we have this very low volume bounce. This is where I bought puts back here somewhere. I actually sold them about right here. And I'll probably go back to that. Puts on the QQQ is definitely high on my radar. And here we're seeing more distribution again here. So we got a high volume down day a couple days back. A little bounce here yesterday, and now we're down again today. We'll see how it closes. That'll actually be very, very important. And we're red on the daily money flow again. More so if you look at the weekly. On the Qs here, you can see again, money flow is still red, and it's not trending towards green. Look at that in a little more detail here. You see that weekly money flow, it is not trending towards green. And if I look at this chart here, let's see what we got here. We go all the way back to April, coming out of the tariff thing, the whole mess there. We did see some nice volume eventually, upside volume when the market was up and volume was rising. Now we've got, significant red volume bars here. Just in the last 4 or 5 weeks, we've got a huge down week here. We've got these 2 low volume up weeks. That was the Thanksgiving, Santa rally anticipation, rate cut. And now we're running into more distribution here. That's the 21-week average shown here. So, look, it's not telling me to jump up and down crazy here, start walking into a bar, loaded guns, swinging them and pointing them at people here. I think it's telling me the exact opposite, to be very careful, very prudent. Now let's look at Bitcoin. Is this leading risk on? Is this, it in a way, I don't really care about narratives and whatnot, but in a way, it does appear to me in some ways that risk on is kind of looking to Bitcoin for leadership and following its each and every move here. So we'll see how that shakes out. And I think it is definitely a good barometer for global liquidity changing at the margin, not the overall aggregate amount. That's in the reports. You can comb through those charts. BitcoinMagazinePro.com talked about those extensively. But I think it is a good barometer and a lead, if you will, on liquidity, which I don't think is actually the main problem right now. Liquidity, it's other things. But anyways, here we are on the daily. We've got just a sequence, boom, 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 lower highs. I mean, nobody can deny that. We came down here, set a most recent local low, and, we got a bounce here, but we did not get up to that critical level around 96K-ish about right here. Never made it up there. Some lower highs, and now here we are, saying more distribution again. It's red. Money flow's red on the daily. And, again, the downward trend continues despite repeated attempts to try to poke above without any kind of volume following through. Now let's look at the weekly for Bitcoin. Of course, TradingView is going to give me problems right when I'm trying to do this. All right, here we go. So on the weekly chart, which I've talked ad nauseum about, to me, all in all, gun to my head scenario, the weekly chart is the most important if I had to choose. But I don't think that's the right way of looking at things. But if I had to choose just one for the sake of argument, yes, I'd probably say the weekly. And here we have money flow. We got the red dot back on October 6th. So the pressure down, and I've been pretty consistent with this, I think, in the newsletters and otherwise, YouTube, whatever. The pressure down has been there for some time now, and it hasn't really been alleviated all that much. So we've got distribution, money flow red on the weekly. It's still actually widening out right now. So what would be nice is if we can develop some sort of a bullish divergence. If we go back to the April low during the tariff wars, We did get some big distribution down here. Money flow was oozing out, and we hit this low right here, 76.7 roughly. And, there were probably plenty of people that thought that was the low, if you will, or what they were looking for. And then we rolled over again. And the money flow during that time was able to round up and start to form a bullish divergence. We do not have that right now, not as of yet. Just simply don't have it. That's a fact. At least in terms of the way that I'm looking at it and the tools that I'm using to look at it. So right now, higher time frame money flow, and specifically the weekly money flow on Bitcoin is still putting pressure down, period, end of story. Can it change? Yes, absolutely. But right now, right here, that's the way I'm looking at it, and I'll continue to behave in that way. I've been in and out of SBIT. I did sell it recently, a big chunk of it. I moved into FD just today because I didn't feel like getting chopped around too much with SBIT here. But I definitely am highly alert to more downward pressure given the higher time frame money flow. As simple as that.